Hi everyone, I am Suhas Mohan, your tax mentor at Being ACCA, and today will be the day one of Master for June webinar, wherein we will be discussing about various topics. Primarily, we'll try to understand what is the exam format, then we'll try to understand what are the common mistakes that the students make, and then we will have a quick revision of our income tax. And after that, we will be solving the question 2 of our pre-June 2026 mock. In that because we'll be solving question 2 because that relates to income tax. So in that we'll be understanding the presentation of how the question should be presented. Then we'll try to identify what are the common mistakes that students tend to make during the preparation of that. Is that clear?
Yes.
Okay. So if you want to connect with me after the webinar, you all have my contact details. It is this one. If you can anytime at any point of time with any of your queries, you can always reach out to me and I'll be very happy to help. Even if you're having small doubts, if you're not understanding how the presentation should be, or if you're not able to understand how the rules are to be applied, you can always reach out to me. Because we are coming to our last 10 days before our examination. At any point of time, you reach out to me with your queries and I'll be happy to resolve them within the next coming one day. Within 24 hours, I'll ensure that all your doubts are resolved. All right.
Okay.
And now coming to a little bit about me. I am an ACCA affiliate and I have secured World Rank 1 in Tax UK examination by scoring 98%. Currently, I am working at EYGDS as an audit associate. So that is about me. So you know whatever the experience that I have had while I was preparing for my tax examination, be rest assured, whatever I have taken as a preparation measures are the same things that I'm sharing with you guys. So
Mhm.
and so if you are having any doubts or any queries on how to go about with your preparation as well, you can reach out to me at any point of time. Okay.
Yeah.
Coming to the pass rates for taxation. Usually taxation is is a paper wherein the pass rates are usually higher in comparison to the others because the main thing is people are able to pass because one, it is very calculation oriented, but it is important that these calculations are based on the rules. So if you're able to remember the tax rules, passing tax exam is not that difficult at all. Once you're thorough with all the rules that are to be studied with in every aspect of taxation, be it income tax, be it corporation tax, be it chargeable gains, inheritance tax, or VAT, any concept, if you're thorough with the tax rules and if you're able to differentiate those tax rules in order to identify what are the tax rules that belong to employment income, income from self-employment, or the rules that how are they different from corporation tax, if you're able to draw comparisons between the topics that you've studied. Let's say income from self-employment, you have certain rules, and then income for corporation tax, you have certain rules. Some of them are similar, some of them are different. So if you're able to remember those rules, then you'll be at a good spot. For chargeable gains, let's take an example. Chargeable gains for individuals, we have different types of reliefs, be it letting relief, private residency relief, investors relief, etc. But for companies, we only have rollover relief. And how is rollover relief? It is very much similar to what you have studied for chargeable gains for individuals, except the part of indexation allowance. So if you're able to draw parallels between the similarity of concepts, then you will be at a very good spot with your preparation. And at any point of time, again, if you're getting confused in drawing those parallels, then you can always reach out to me and I'll be happy to guide you in a step-by-step manner on how you should go about with your preparation. All right?
Okay.
Great. Now, these are the few results that we have received in the prior quarters, wherein the students have actually scored 79 in taxation after attending our sessions, and this is what they had to say about us. So, do not worry. We will ensure that until the very last day, you are getting all the necessary care that is required to ensure that you're thoroughly and well prepared for your examination. Now, coming to the important part of taxation, which is a tax core structure. In that, there are only two minor areas. Other than that, all of them are very major. The major areas are income tax and NIC liabilities, from which you'll definitely get a section C question for 15 marks, and it'll also be a part of your section A. And then chargeable gains. Chargeable gains will be a part of your section A, and one question that is for 10 marks of your case study questions will be coming from chargeable gains, inheritance tax, and value added tax. Like 30 marks are or directly of from only one section are dependent on these three areas, while your section C will majorly include income tax liabilities and corporation tax. We call value added tax or VAT to be a minor area because in comparison to the other taxation rules, the value added tax rules are pretty much straightforward and easier to remember in comparison to the others. That is why we call it a minor area. It is not based on the weightage. Your examination weightage for all these topics will be very much equal. So you should never neglect one topic. You should never be like, okay, I'm thorough with income tax, chargeable gains, and inheritance tax and corporation tax, so let me skip value added tax. No, you should never do that, because it is important that you attempt your examination for the full 100 marks without leaving any stone unturned. The chances of a student passing when he attempts, or when he or she attempts the full 100 marks paper, is much higher than the person who attempts it for 80 marks, because the risk of losing marks reduces when you attempt it for full. Got it?
Yeah.
So try to ensure that you're able to finish your entire examination within the time duration and you're able to attempt the entire paper. So for that reason, regular practice of questions and solving mocks before your examination is very and very much important. The more the number of questions that you solve, the more you'll be thorough with the concepts. And then when you solve your full-fledged mocks, at least 3 to 4 full-fledged mocks, what will happen is it will ensure that you're completely thorough in order to with your time management and able to solve the questions on a bigger picture, like where you're able to cover all the 6 areas in your examination and how much rules are you able to remember. So once you identify that, you'll know about, okay, what are the areas that are lagging behind in and what are your strengths. So with the areas you're lagging behind in, it'll give you some time to revise on those concepts and improve yourself before you're ready for your examination. Okay.
Okay.
A- Any doubts on this one so far, guys?
No.
Okay. Now, coming to our exam format. Our examination, as you all know, we have 3 sections. In our section A is completely MCQs, where we'll be getting 15 MCQs with each question carrying 2 marks. So the maximum amount of time that you can spend for a question that comes in your section A is 3.6 minutes. But I would ideally say we'll keep it at 3 minutes, not and keeping the point 0.6 aside. So the more number of time that you're able to save in your section A's and B's, you'll be able to utilize that in your section C. Okay, because section C is something you'll have to perform you'll have to present the entire answers and all of that. So for that reason, it is always better to minimize your time that you take in your section A and B and keep it for section C. But if you are a person who feels section C, I'll be able to present it faster, but the MCQs is where it gets tricky for me, then take up more time in section A and B and keep lesser time in for section C. All right. And section A can come from any area. It can come from your income tax, it can come from your corporation tax, chargeable gains, inheritance tax, and VAT as well. So it can come from any length and breadth of the concept. So it is very, very important that you are very thorough with the rules, because in section A and section B, you will be asked with theory questions wherein they might ask you to choose multiple options. And in choosing those multiple options, you might be aware of one part of it, but you are not able to identify the second option, because of which you will lose your entire 2 marks. You will not be getting partial marks like you get in your section C. So it is very important that you're thorough with the rules as much as possible. That is one thing. And second thing when we are discussing about section A and B is that when there are any questions that involve calculations, try to start solving the question rather than looking at the options, because before looking at the options, if you're able to start solving it, you will be saving that time that you take in order to look at the options. Because for theory questions you can use the method of elimination, but for numericals you will not be able to use that. So for that reason, it is very, very important that you take up time to start solving the question rather than looking at the options that are there with you. Okay. Like let's say they give you the entire details about savings income of an individual, dividend income, and their non-savings income like property income or employment income. Using those, what will you be able to do? You'll directly be able to calculate the answer, because even by looking at the options, you'll not be able to figure it out just by looking at them. You'll have to solve it anyway. So take up the time instead of looking at the options to actually start solving the question. So once you're able to solve the question, you will be at a very good spot. Is that clear?
Yes. So, which section would you recommend starting with first? I usually hear people recommend starting with section C first.
So, Damien, that is completely person to person personal choices, because some people who feel that okay, they're able to type the answers out fast and present the answers fast, they start off with section C. But while on the other hand, some students feel it's easier to solve my MCQs first, so I'm able to save time for my section C and put it for the last. So it is completely personal choice. So in order for you to be able to figure that out, I would recommend solve your mocks, at least 2 to 3 mocks, so you will understand what is your strength and what is your weakness, so you can start off based on that. On a
Right. Okay.
personal level, I am someone who starts off and I go in the same order as the questions are given. Like I start off with section A first, then B, then I move on to C. So it depends completely from one individual to another individual.
All right. Okay.
And I hope all of you are maintaining a notes right now in order to in order to note down all the points that we are discussing right now, so that it will come in handy for you during your preparation days. Okay.
Yeah.
Next is your section B. In section B, we have three objective test case questions, wherein each test case, one will be from your chargeable gains, one will be from inheritance tax, and the other will be from VAT. This will not change at all. These three concepts will definitely be tested in your section B. All right, once you solve those, you will be at a better spot. You'll be able to understand. If you're thorough with chargeable gains, you'll be able to solve the first question. Second question can come from inheritance tax or VAT in any order. These three questions can come in any order, but these are the three areas that will be tested in your section B for sure. So being thorough with MCQs when it comes to inheritance tax, VAT, and chargeable gains is very, very important. All right. And again, section B also, it's the same rule, because it is either a yes or no. That is, you'll either get full marks or zero. So it is very, very important that you're able to identify when there are questions with multiple aspects that are being tested. Like let's say they're asking you to identify out of the following assets, which of them are considered as exempt assets for chargeable gains. Then you'll have to know what the exempt assets are in order to be able to answer that question. So being thorough with the rules is very, very important. Now, coming to section C. Section C is the most predictable one that you will be able to find. There are two reasons for that, because section C has three questions. First one will be a 10-mark question, which will be about income tax planning, where they'll ask you about how much income tax will be saved if an individual who's, computing his tax under income from self-employment actually incorporates his company and starts charging for corporation tax. That will be one type of question. Or the other type of questions might also come about CGT planning, where they are like, how if I transfer an asset to my spouse's name, then how will the chargeable gains be affected? So these are the kind of questions that you get in your income tax planning question. This is usually the most trickier question that you will be finding. Then income tax or corporation tax, because the second question and third question each carry 15 marks, very heavy weightage and the highest weightage that you can find out of all of them. In income tax, either they'll be asking you to calculate employment income, income from self-employment, or your income tax liability, or your total taxable income. These are the three types of questions that you'll be able to expect in your income tax. So if you're thorough with all the rules, what will happen is, if you're losing out marks on one step, but your other steps are correct, you'll be getting marks for those. Unlike your section A and B, you'll not be losing out on marks if you make a small mistake, but you will be getting marks for the other right ones. So this is the most scoring aspect. So the more number of questions that you solve with section C, the higher the chances of you passing. Okay. Are you guys having any doubts or any questions so far? All right, great. Now let's move on to the next concept, that is about why most of the students fail. As we have seen, the pass rates of tax examination are almost over 50%, but majority of the students tend to fail only because of lack of exam practice for taxation, because it is a very lengthy subject to remember. Though it is application based, though it has a lot of numericals involved, it has a lot of rules to remember, unlike your FM or FR papers, wherein if you are able to remember them once, you can apply whatever you have studied. But here, remembering the rules is very much important. If an FM, if you take, like, you have to calculate NPV, if you remember the formula once, you'll be able to calculate it. But here, the computations are rule based, which means you will have to remember the rule, only then you will be able to solve it. Let's say we have in employment income, they have given us about car benefit. Unless you remember that you should take list price into the appropriate percentage, you will not be getting your car benefit computation correctly. And if, say, in that car benefit computation, they have given that 10,000 has been contributed by employee. Usually for taxable benefits, what do we do? We can reduce the employee contributions based on how much ever they contribute. But for car benefit, how much is the maximum reduction for employee contributions that can be deducted?
5,000.
5,000. Exactly. So if you don't remember that rule, what will happen? Will you not lose out on your marks?
Yes, you will lose
So
out.
for that reason, solving as many questions as possible is very, very important. The more number of questions that you solve, the more better you'll be able to remember the tax rules, because once you make a mistake in remembering the tax rule and then you try to look at the answer, when you look at the answer, you will identify what your mistake is, and because of that you will be able to remember that rule even on a better man in a better manner. So solve questions, solve mocks, at least 2 to 3 mocks before you attempt your final examination, so that it will help you understand your comprehensive understanding. That is, how better are you able to remember all the concepts, that is tax rule relating to income tax, corporation tax, VAT, and inheritance tax all at once. Rather than just remembering rules of income tax, then you move on to solve corporation tax, you'll remember the rules of corporation tax. But how much are you able to remember on an overall level is only something that you'll identify when you solve full-fledged mocks. Okay. And next is not focusing on the theory. Not focusing on theory is something that many of the students fail to understand the importance of. Theory questions. There might be multiple types of theory questions. Theory questions might come about what are the different types of exempt income, what are the different types of exempt assets for chargeable gains, all of these. And on the other side, you will be getting a tax administration part about when is the filing date, what are the penalties applicable, when can a compliance check be taken into consideration. All of these are theoretical aspects. And let me tell you about the tax administration part for individuals, companies, or chargeable gains or inheritance tax, about when is IHT due when is IHT due on death, or when is corporation tax due, when is a payment on account to be made. All of these are something that will be tested for at least 8 to 10 marks in your examination. Your section C question that we were discussing about earlier, which is of 15 marks, usually what happens is, the solving part of it, where you calculate, compute your income tax liability or your corporation tax liability, will be for a total of 12 to 13 marks. But the last 2 marks will be based on these theoretical aspects in your section C itself. So from the tax administration part, it is very, very important that you pay attention to it once you're thorough with all the tax rules, because that is straight up theory which you just have to remember about. What is a filing date, what are the penalties that are applicable, how much are the penalties that are applicable. If you don't remember them, you will be losing out on your marks of at least 8 to 10 marks for sure. But sometimes in the last quarter, it has come, theory questions have come up to almost 14 marks. So focus on theory, especially because you're coming to our last 10 days. This is the right time to start off with your theory preparation. Is that clear? Any doubts so far, guys?
Yes.
Okay. Next is about ignoring minor areas. Ignoring minor areas in tax exam, all of them have equal weightage. The minority of the areas is only based on tax rules, the tax rules that are heavy. You all know tax rules are heavy in which areas? Can you guys tell me? Income tax, yes. Corporation tax, yes. Chargeable
Inheritance.
gains and inheritance tax, correct?
Yeah.
But in comparison, VAT is not having as many tax rules as in comparison to these four aspects. So that is why we call it a minor area, but not because the weightage of this area is little or less. The weightage of all the chapters is equal, and it is very much important that you remember that and your in your preparation and not leave out any of the concepts during your preparation. Okay. The next important rule is not being able to remember the tax rules. This is something that I've repeated, and you all can vouch for this. All the students who are in my revision course can vouch for this. That tax rules, cumulative preparation is something that I have been telling from day one in our classes. Is that correct? Because there are a lot of rules to remember. It is very, very important that you take up your preparation in a cumulative manner. So that what is cumulative manner? Today you study one chapter of income from self-employment. Tomorrow you go to partnership. Before you start off with your income from self income partnership, theory, new rules part of it, revise on the topics that you have studied in the previous days. So what will happen by doing this? Every day you will have your revision in a very thorough manner of all the tax rules, and by the time you are ready preparing for your final examination, that is in the next 10 days, you will be very thorough with all the rules. There will be no chance that you will forget any of the tax rules. The more the time that you spend on remembering the tax rules while solving the questions on applying those tax rules, the better chances are that you will be able to clear your examination. All right. Next part is about your calculation errors that students make. What are calculation errors? Calculation errors are major, very small mistakes that the students tend to make. Like if instead of, let's say, an expense and income from self-employment is to be added back because it is disallowed. But when you know that the rule is to be added back, so you add it back. But instead of keeping it in a positive sign, you put a minus before it. Because of that, what will happen? Your final answer changes. Yes, no, maybe.
Your audio.
Yes. And again, capital allowances. Do you have to add it or do you have to deduct your capital allowances when you're calculating your tax adjusted trading profits?
Deduct.
So you will have to deduct it. You know the concept. But what if you missed out on putting that one minus symbol and then you have added down everything? What will happen because of that? Your entire answer goes for a toss. Though your calculation, everything was correct, because you missed out on taking the sign correctly, your entire answer is gone or gone wrong. Because of that, you will lose 2 marks in your section A's and B's, or in your section C, you'll lose partial marks. Yes, no, maybe.
Section A, you will lose the entire mark.
Yes, section A and B, you lose your entire marks. Section C, you lose your marks partially. Correct? Because your calculations, instead of subtracting it, you just added it in a wrong manner. So, very important that once you finish your paper, always what I would encourage the students to do is your exam duration is 180 minutes. So, try to finish your exam within 2 hours 40 minutes, that is within 160 minutes, so that you can take up your last 20 minutes to go back and check all your answers, so that you need not have to solve it entirely, but you can just verify the calculations if you have done it correctly or not. So that what will happen, by cross checking that, you will know if you have made any mistakes, silly mistakes, because of the stress of completing the exam on time. You will be able to go back and correct it. So try to finish your examination within 160 to 165 minutes, so that you can keep your last 15 to 20 minutes to go back and check your answers once. The next is about not utilizing the tax tables efficiently. In tax, you are very advantageous because you will be provided with the tax rates that are to be remembered and the percentages applicable. Like, let me pull that out for you real quick. Yes. So all these are really provided to you, like what is the income tax rates, what is the personal allowance rate, how much are this car benefit percentage, what benefit percentages are to be taken. All of these are literally provided to you. So the more they are able to utilize them in your examination, you will not be wasting your time in remembering unnecessary things. Like, guys, let me tell you, during my preparation, I found it really difficult for me to remember the dividend rates. So what I did was I did not even remember the dividend rates, but every time during my practice, I used to pull up this tax table. This table will also be provided to you in your examination. I used to pull it up, look at these percentages and apply it in my calculations. Okay. So if you're able to use these, you will not have to remember what the tax rates are and all of that. Obviously, with practice, you will get used to remembering them. But if you make it a point or a habit to actually look it up whenever you're solving the questions, it will really help you a lot. The more the time that you spend on utilizing these tax tables, the more time you will have to remember important tax rules, because tax rules will not be provided. Tax rates will be provided but not the rules. So if you are thorough with the rules and if you know how to apply the tax table, trust me, your examination will clear without a doubt. Because sometimes what students make a mistake, they know that dividend income, they have to calculate it as dividend and show dividend income separately. They will show it, but because of the exam hurry, what do? They take up the tax rates of in non-savings income and savings income for dividend income as well, because of which your tax liability is calculated incorrectly. Yes, no, maybe. Y- Guys, are you listening?
Yes.
So for that reason, it is very, very important that even though you know them, just for one last reference, you can always refer to them when you're preparing for when you're solving your kit, or when you're solving your fine mocks as well. Try to utilize the tax tables as much as possible. The more you utilize your tax tables, the better your preparation will get. I hope you guys have made a note of all of these. If you think these are if you're not able to identify or remember them, you can always reach out to me about how to remember the tax rules or anything, and I will be very much happy to help you out in your preparation. Next, we have exactly 10 days for our examination. Exam is on June 2nd. Yes.
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 So in those 10 days, what is your goal? What is your goal, or what is your time schedule should be? Your schedule starting from tomorrow should be from 22nd to 26th onwards. You should take up time in order to revise on all the concepts and solve the questions that you're majorly going wrong in. I hope all of you have completed your, your revision of your entire concepts by now, at least once.
Yeah, I still have one more of the VAT video to go through, but other than that, yes.
Okay. So if you're able to finish that today, then from tomorrow onwards, start up with your second revision, wherein you will have to revise all the rules that you've started studying, right from your residency rules all the way to your VAT. Take up your next 4 days for those preparation. And after that, from 26th onwards to 29th, solve the kit. The maximum number of questions that you can solve as from your study hub or from your kit that you have got. Solve as many questions as possible and ask as many doubts as possible, so that you can take up your last 3 days, that is your 29th, 30th, and 31st, for your mocks. Write at least, attempt at least 3 mocks, so that you will understand what are your areas you're lagging behind in. Your first mock, you might get less marks. Don't get disheartened. Try to identify what are the areas that because of which you're losing out on your marks. Then the next day, take up some more time to be better with the areas that you lost marks in the prior exam. Exam 2, you will definitely have a better result. Once you're having a better result, your exam 3, try to identify the mistakes that you have made in their previous test, improve on those. Day 3. And I'm not saying that you just have to prepare or revise only on your mistakes, but also all the tax rules simultaneously. Use that time up. By 31st, you will be at a good spot with your preparation. You will feel I am actually wholesome with my preparation and I am looking forward for my examination. That is what your mentality will be once you follow this approach. All right. So that first you can keep it. If students tend to prepare more on their last day, go ahead for it. But for the students who tend to keep it light over the last day, try to keep it light, but ensure that you're very thorough with the rules. And on the last day also, do not try to learn any new rules, but try to revise on the ones that you have already studied until the previous day, because it has already been 2.5 months since all of you have started your preparation. Yes, probably from mid of March, you guys must have started your revision preparation for your tax examination. So whatever you have studied in those 2.5 months, try to revise on them instead of learning any new concepts. Because on your last day, if you learn new concepts, you tend most of the students tend to forget the rules that they've previously studied or get confused. So do not make that mistake. You have put in all the efforts. Just revise on those and be prepared for the examination on the next day. Go with a fresh and open mind. Have a good sleep. Sleep is very, very important. If you neglect on your sleep before your examination, many students will not be able to focus on their examination because they did not have a good night's sleep. So it is very important that you take up your preparation in such a way that you also get a good night's sleep before you go to your examination. Now, with this, I hope everyone is clear with their exam preparation. What are the mistakes that are to be done? What are the mistakes that students tend to make that are to be avoided? Yes, no, maybe.
Yes.
Okay. Now let's start off with the agenda for this webinars that we have got. In our first webinar that we are having on today, we will be having a quick revision through income tax and NIC liabilities. Along with that, we will also solve a section C question that relates to income tax from our pre-June 2026 mock. And after that, we will try to understand how the exam question should be presented and what are the question mistakes that students tend to make in that. Okay. Are you guys have any ready for income tax revision? Are there any questions that you want to ask or you want to point out something? Derica and Damien, are you guys good too?
Oh, yeah, we're good. Oh, I'm good.
Okay, great. Now, can you guys tell me what is income tax? We will keep this in a more interactive manner so that I understand we have already coming close to our final examination date. So we'll keep it more interactive so I can also gauge on your understanding. Can anyone tell me what is income tax?
It's tax that is payable on all sources of income.
Absolutely right. On all taxable sources, because there are also few incomes like gambling winnings and all of those that are exempt. So all the taxable sources of income and how the tax is to be paid on all those sources is what we will be studying in income tax. Now, for income tax purposes, it is important that we understand the major types of income to remember that is important for your preparation will be property income, employment income, pensions, income from self employment, and trading losses for individuals. These are all important aspects because your majority of your computation in your income tax will be relating to non savings income, and these are all the sources of non savings income. So for that reason, it is very important that you take up your preparation in such a way that you are very thorough with your computation of your non-savings income so that the tax computations become easier. Is this clear, guys?
Yes.
Yes.
For income tax computation, what is the first thing that we look at if an individual is a resident of the UK or not? Yes, no, maybe.
Yes.
Yeah.
So for that reason, what are the rules that we have got? We have got our automatic non-UK residency test, which is to be done first. Then our automatic UK residency test, which is to be done later. And then we have our sufficient ties test. So these are the three tests that we perform in order to conclude if an individual is resident of the UK or not. And let me tell you something, these residency rules are also very much tested in your examination. You'll at least get 2 to 3 questions on your residency status and all of those. So it is very important to identify what is a sequence and what are the sufficient ties test and how are the tests for how do you identify if an individual has satisfied the number of ties or not are few of the very important questions that will be tested in your examination. So take up some time to revise on all those rules as well. Do not keep yourself focused only on your computations like your property income, employment income, or income from self-employment, but also take up time to revise on these theoretical aspects as well. Okay. Now, coming to our property income. What is property income? It is the income that is generated based on any properties that we let out for rent. Yes, no, maybe.
Yes.
So in that, how do we calculate for individuals income? All these incomes are to be computed based on their tax years. Income tax is to be calculated on the taxable income arising in the tax year 2025-26. That will be from 6th April 2025 to 5th April 2026. Very important that you remember this rule. If you are having incomes from 1st January to 31st January, 1st January to 31st December, then you should only consider the period that falls in the current tax year, that is from 6th April 2025 to 31st December 2025. And the other income that is from 1st Jan to 5th April will be part of the prior tax year. Very important that you remember this in your computations at any point of time. That is one thing that you should remember. And common mistakes that students make when it comes to property income is their finance cost reduction. Can you guys tell me what should be done if there is any finance cost, finance charge involved relating to property income? Anyone? Let's say you have purchased a property on it by taking a loan out. So there will be interest incurred, that is your finance cost incurred. How will you deal with that for taxation purposes?
The, the
Do we
interest,
deduct it from... Oh, sorry, Damien. Do you want to go ahead?
sorry, the interest is deducted from the loan benefit calculation.
Yes. So where will that loan benefit? Will it be a part of your property income computations or do we show it separately?
This is shown separately.
Yes. Interest finance cost that is applicable. Finance cost on properties that are let out will be a tax reducer at basic rate. Let's say, for example, you have paid £1,000 as interest. Pounds as interest. Then what will happen? 1,000 into 20%. 1,000 into 20% will be reduced from your final tax liability. Will be reduced from your final tax liability. Is this clear? Any doubts on this one so far?
So we don't deduct it from the property income figure. We deduct it at the end from our
Yes.
taxable income figure,
Not from our taxable income, from our tax liability.
tax
So let's
liabilities.
say he has only property income of 45,000. Okay. So that means, and this is excluding the interest. Okay. Now, what will his tax liability be? Is equal to 45,000 minus personal allowance 12,000. How much is your personal allowance?
12,570.
12,570. Yes. 32,430. So is he's a basic rate taxpayer now?
Yes.
So
Yeah.
his tax liability will be into 20%. From this, you should reduce your loan relief or interest relief. Loan interest relief will be minus 20. So your final tax liability will be now at is equal to 6486 minus 20 pounds will be 6466. This is one of the concepts that most of the students tend to forget or tend to consider that okay, interest is because it is being incurred on property, they tend to show it as an expense. Never do that. It should be deducted as a tax relief, not as a part of your in property income. Any doubts so far? And this will always be at 20% only. That is your basic rate tax and not at your higher rates.
Do you mean that even if the person is a higher rate, that it would still be 20%?
Yes, even if an individual is a higher rate or an additional rate taxpayer, the interest tax reduction or tax, or the loan interest relief will always be at 20% only. It will not be at the rate at which the rate of taxpayer. It will always be capped at 20%.
Okay.
All right, clear on this one? And what is the default basis for property income computation?
Cash basis.
Cash basis. Absolutely right. Now, for corporation tax,
Accruals.
Rule
accrual
is
basis. Absolutely. So if you try to draw comparisons like this in your preparation, then there will be no one that can stop you from clearing your examination. The more you remember the rules, then the better you'll be at clearing your examination. All right. Any doubts on this one so far?
no.
Okay. Now, what if there are any losses that are incurred on property income? What should you do? You sum up sum total of all the properties, and then if any losses arise, you'll be showing your net property income. But if you make any property losses in the current period, then it should be carried forward and set off only against property income in the future and not against total income. Is this rule clear? This is also something that the students tend to miss. So it is very important that you remember that the losses of property income that cannot be set off against other properties in the current year should be carried forward and set off against property income that arises in the future and not against total income. Yes, no, maybe?
All good. Thank you.
All right. Next, coming to our employment income. Employment income is one of the vast subjects and vast concepts that you have got in your income tax. Employment income and income from self-employment are two major chunks of taxation, of income taxation, that if you're able to remember them, then your income tax computations becomes a cakewalk. Because there are a lot of rules to be remembered, but there are two things that you should remember when it comes to employment income. For you to remember employment income, your focus should be on these two things. What are the fundamental is your taxable benefits, because any question that asks about employment income will definitely ask about the taxable benefits. Like that will be something that involves that will, at least in sections, if you get your employment income, only the marks that relate to taxable benefits will be approximately 4 to 5 marks. Okay. So, and sometimes in your section A also, they'll directly ask you what will be the taxable benefit that arises on this. Let's say they'll give you a value of the property and they'll be asking you about what will be the taxable benefit. That will be a straight up question. So you can expect a lot of questions around taxable benefits. So for you to, be thorough with income tax, it is important that you are very thorough with taxable benefits. Now, for taxable benefit, what is the fundamental rule that we have got? It should be prorated for the period that it was provided to the employee. Is this correct? Is this correct? Are you guys with me on this one? If
Yeah.
a benefit is provided to an employee only for 6 months of the year, then the taxable benefit should be prorated only for 6 months and not be accounted for entire year. So for your employment income, for you to score major marks in employment income, it is very important that, let me actually write it in bold, that you look at the dates. If the dates are not completely falling in the tax year, falling in the tax year, then you should take the benefit. You should take the benefit only for the period that it falls in the tax year. Is this point clear? So, looking at dates, anytime you have an employment income question, the first thing that should come into your mind is what date is it provided from and what date is it provided until. If it says it's provided for the tax year, then you know full benefit is to be taken. But if there are specific dates given, like let's say it's been provided from 1st September onwards, then how many months is the taxable benefit being provided for from 1st September 2025? How many months is the benefit being provided for?
7 months.
7 months. So in that case, you should prorate the benefit for 7 months. Is this clear? Yes, no, maybe.
Yes.
That is one rule. And the next is employee contributions. Except for car being provided, if there are any employee contributions, if there are any employee contributions, that amount should be deducted. That amount should be deducted in computing your taxable benefits. In computing your taxable benefits. So it is very important to look at employee contributions. If they say that employee has contributed 200 pounds per month, then how much contribution should be deducted?
It would be the 200 by 12 for the full year.
For the full year. So it will be 200 into 12. Absolutely right. So that is how you should look at it. The employee contributions. The keywords in this one will be if it is being provided per month or in total. So in this one, looking at the grammar of the words is very, very important. Is it provided for the tax year or not? Is it provided for month or in total? You'll be able to understand that only if you look at the theory. If you read the question, try to read the question twice or thrice to ensure that if you're reading it correctly, if you're able to understand or gaze that correctly, only then you will get a right answer. So remembering taxable benefits plays a very, very crucial role. In taxable benefits, one of the other mistakes that I find the students making usually is relating to additional benefit on property income. Additional benefit on accommodation provided. Accommodation provided. How do you calculate an additional benefit on accommodation provided and when should it be computed?
If the property is more than £75,000.
If the cost of the property is more than 75,000 pounds, 75,000 pounds, then additional benefit arises. Absolutely right. Additional benefit arises, which will be excess over 75,000, which will be excess over 75,000 into 3.75%. Yes.
Yes.
But now I have a question over here, which is where most of the students tend to make a mistake. Let's assume the property was purchased 7 years ago at a cost of 45,000, and now its market value is 80,000. Will an additional benefit arise? Yes, no, maybe?
I think no,
Okay,
Yeah.
Ahad says no. Damien also says no. Why do you think so? Both of you guys?
because the original cost of the property is what matters, not the market value.
Absolutely right. That is bang on right answer. Because usually when the property purchased is more than 6 years ago, students tend to remember the rule that market value should be considered. Market value should be considered, which is correct. Market should be considered for additional benefit computation, which is correct. But it should only be considered if the initial cost is more than 75,000. If the initial cost is more than 75,000, if it is not more than 75,000, then an additional benefit will not arise at any point of time. Additional benefit only arises if the cost is over 75,000. Clear on this one? These are some of the trickier rules in employment income, and it is important that you remember these tricky rules. Next, moving on to understand, for you all know that the basic fundamental is that for taxable benefit it should be prorated, and if any contributions are there, it should be deducted. But there are a few benefits known as exempt benefits. If you do not remember, and this list is extensive. If you do not remember the exempt benefits and consider them as, if you do not remember the exempt benefits and consider them as taxable benefits, you will lose out on your marks. You will lose out on your marks. So it is very, very important that you first, if you are thorough with exempt benefits, you know what are not taxable. So you will be getting your taxable benefits right. So try to take up some time, at least tomorrow or day after, to ensure you're thorough with all the exempt benefits. Like let's say beneficial loan. Students tend to take the average method, or the average method, and try to compute their beneficial loans taxable benefit that arises. But what they tend to forget is, if the beneficial loan amount is less than 10,000, it is an exempt benefit, correct? So only if you remember this rule, then you'll be able to calculate your taxable benefits correctly. Is this clear, everyone? Are you guys having any doubts on this point? Try to take up in sufficient amount of time to remember exempt benefits. Relocation costs up to 8,000 pounds exempt. Medical insurance provided up to 500 pounds exempt. One mobile phone provided exempt. Beneficial loan less than 10,000 pounds exempt. Long service awards. If an individual works with the employee for 20 years, per year 50 pounds is exempt. All of these rules, and the list is exempt, is extensive. Like, I will not be able to tell out all the rules in this session, but these are some of the ones that are majorly tested. So try to remember the exempt benefits first, so that you understand and remember the taxable benefits part of it later. Only then you will be getting your taxable benefits correct. And in your exam presentation, that is in your section C questions, if there are any exempt benefits that you have identified, your employment income computation should show an exempt benefit with zero. Because it is exempted and no, it will not affect your employment income, exempt benefit should be presented with zero. Only then you will get zero point 0.5 marks. Otherwise, though your entire answer is correct, you have calculated absolutely everything, taken everything into consideration, But for exempt benefits, you have not taken them into consideration at all. You have not shown a zero beside it. You will lose out on half a mark for all of them. Let's say there are 2 to 3 exempt benefits, like let's say relocation expenses. It has been mentioned as £8,000, 7,500. It is less than 8,000 exempt. And then gym provided within the office, open to all employees. It costs £250 exempt benefit. And now over here, it says your salary is £15,000. And after this, let's say your accommodation, living accommodation benefit provided is, I'm not calculating this, guys, I'm telling the values directly, is 3,500. So your what is your total employment income? It will be sum total of all of these. 15,000 to 3,500 will be 18,500. You get 18,500. But let's remove these both. Right now, is your answer changing anyway? Are you getting the same answer? Yes, no, maybe?
Yes, same answer, but
You're
for
getting
completeness, it's better to
absolutely.
include the exempt benefit.
It is not better, Ahat. It is mandatory to include it, all right? Because right now your calculation, everything is correct. But let's say if the question was being tested for 4 marks, you will be getting only 2 marks here. Your 8,500 is correct. 18,500 is correct. But you will only get 2 marks and you will not get your 4 marks. So for you to score full, any exempt benefit should be taken. Only then you will be getting the marks allocated to it. All right.
Mm.
Yes.
Similar to this, now let's go to income from self-employment, which is our third type of income. Income from self-employment is what type of income? Is it non-saving, savings, or dividend income?
Non-savings.
Non-savings income, absolutely. So when it is
This is
income
the
from,
trading income as well. Is this the other name,
yes,
trading
yes,
income?
trading income, yes, or tax-adjusted trading profits. Usually you call it income from self-employment, and in your computation towards the end, you call it tax-adjusted trading profit, but it's one and the same, don't worry. Hmm. Okay.
Yeah,
All right. So when it is income from self-employment, what is a default basis?
cash.
Cash basis. But let me tell you something. In your examination, at least they will majorly, like at least 30 to 45 to 50% of the times, they test you on accrual basis only, because this is something that involves a feature called capital allowances. Yes.
Yes.
So capital allowances is one of the pointer of income from self-employment which carries major weightage. You will at least be getting 3 to 4 marks of your computation only for in of your correct computation of your capital allowances. So be thorough with all the rules. What is AIA? What is FYA? What is WDA? What is small rate pool? What is private use pool? How is it calculated for each of them? The rules around capital allowances, if you're able to remember them thoroughly, then your preparation is at a good spot. Okay. Yes, no, maybe.
Yeah, okay.
So cash basis, we all know that there is no distinction between capital expenditure and revenue expenditure. But when it is accrual basis, we should always take cap only revenue expenditure and not capital expenditure, correct? Capital expenditure. Yes. Yes, no, maybe.
This is under the accrual basis, right?
Yes, under accrual basis.
Yeah.
Because capital expenditure will be part of what? Where will we be taking our capital expenditures?
Under CGT.
Also capital allowances. For capital expenditures that you incur, you'll be getting capital allowances, right? So it'll be part of your capital allowances. Okay.
Right. Okay.
So it is very important that you remember what basis is being asked for. In question, usually they'll mention what basis is being asked for. If the question asks you to start from the net profit figure, then you should always assume that it is accrual basis and not cash basis. Accrual basis and not cash basis. Very, very important. You, if it says for based on cash receipts, then you should assume it is cash basis and not accrual basis. Clear? So based on what is your starting point in their questions, usually they will mention that take this as your starting point and calculate your incomes. So that is when you should always remember, if it's net profit, you should take accrual basis. If it is cash receipts, you should take cash basis. Clear on this one? Like in employment income, we have seen exempt benefits to be one of the heavily tested aspect, correct? Per income from self-employment or tax-adjusted trading profit, heavily tested aspect is disallowed and allowed expenditure. Disallowed and allowed expenditure. When we come to accrual basis, what are the disallowed expenditures? Anyone?
Impaired debts.
Impaired debts. Impaired debts, or are you talking about impaired debts? Will be, you will be able to reduce it, right? It, yes.
Uh,
Depreciation is one of an example.
yeah, depreciation is disallowed.
Yes, I'm talking. So here, impaired debts are, what are they? They are bad debts. So they, if they are written off, you'll be able to reduce it. Correct?
Correct, yes.
Yeah, okay. Now, depreciation, all non-cash expenditures. Non-cash expenditures like depreciation, amortization, loss on sale of asset, loss on sale of asset, all of these should be added back if they are included in the net profit computation. Again, a keyword. If they are included in the net profit computation, all of these should be added back. Is everyone with me so far on this one?
Yeah.
Now I have a doubt. If these expenses are not included in the net profit computation, then what will we do? If expenses like depreciation, amortization, or loss on sale of asset are not included in your net profit computation, then what do we do? You
So,
should show it with a zero. Show it with a zero. So here the
so
keyword is, in the question you should clearly read question. You should read, if these expenses were included in computing your net profit or not. Because if they're included, if included, then disallowed expenses should be added back. Disallowed expenses should be added back. If not included, then disallowed expenses should be presented with zero. Should be presented with zero. Is this clear?
so if for example depreciation was not mentioned in the question at all, in our computation we would still have to put it but with a zero.
No, no. So let's say they say, okay, let's say they have said the net profit is 25,000, and in this computation, the depreciation of 4,000 was not included when they clearly mention about non-cash items. In that time, you should
Right.
write net profit is 25,000. Net profit is 25,000, and you should write depreciation to be at zero because it is a non-cash item. And if you don't present this, you will lose out on your half mark.
Right. Okay.
But if they say in the computation, the depreciation was included, then what do?
You add it back.
You add it back at 4,000 pounds. Absolutely right. So these all the disallowed expenditures are something that you should remember. Let's say when you are doing accrual basis car leases, what happens with car leases if the CO2 emissions are more than 50 grams per kilometer?
15% is disallowed.
Absolutely right. 15% is disallowed. So if it is disallowed and it's included in net profit, you add it back. Otherwise, you take it to be zero. Clear? What
Yeah.
about fines paid? So these are the few of the aspects that are majorly tested. One is about car leasing, and the other is about your fines paid for health and safety regulations or something like that. Health and safety regulations. Are these allowed expenditures?
I think it depends if the fine is incurred by an employee or by the employer.
Always remember, fines paid for health and safety regulations are always disallowed. Disallowed. Only fine that is allowed is fine that is allowed expenditure is parking fines incurred by employees. Parking fines incurred by employees. Only these, that too on work premises or when they are on work on business purposes. Okay. Other than that, all types of fines are always disallowed. Whenever it is disallowed, it means it should be added back. Clear?
Yeah.
Now, what
Okay.
about gifts to customers?
There's a okay. There's a certain amount per year that can
Yes,
be given.
gifts to customers are allowable only if they satisfy all these three conditions, satisfy all the three conditions. And the three conditions are the cost is less than 50
50?
pounds, 50
Right.
pounds per recipient per tax year. Per tax year. This is one of the rule that you should remember. And the next thing is, what is the next rule? Can anyone tell me?
It bears the
And
company logo.
Yeah, it has clear marketing value involved.
and it
Marketing
isn't
value involved.
it isn't drink, food, tobacco, or vouchers that you can exchange for goods.
Yes, marketing value like logo. Then it should not be food, drinks, tobacco, or vouchers that can be exchanged, or vouchers that can be exchanged. So, and is it okay if it satisfies two conditions and not the third one?
It must satisfy
No,
all three.
It must satisfy all the three conditions. So, remembering all of these rules is very important because you might remember these rules, but you might not remember the word that it should satisfy all these three conditions, because of which the students tend to lose out on marks. So, remembering those keywords like all, is it either, and all of those is very, very important in your preparation. Okay. Now, the other aspect that the students tend to make mistakes when it comes to income from self-employment is, let's say the company has accounting period ending on 31st December 2025. Then how do we compute income from self-employment that is to be included in the income tax computation. Income tax computation. How do we include it? Can anyone tell me? The accounting period of the company is ending on 31st December 2025. Then how do we include the income from self-employment for the income tax computations? Anyone?
It, that we consider the first 12 months first and then the remainder.
Here it's only for 12 months. Let's say it's from 1st Jan 2025 to 31st December 2025. It is only for 12 months. So whenever you have questions like this, it is important that first you calculate. This is your first step. If you guys have confusion regarding this, please make a note of this, because this is something that majority of the students tend to make a mistake in. First, you calculate the tax adjusted trading profit based on the year ending 31st December 2025. Okay. First step is clear. You calculate it normally. Is that clear? Yes, no, maybe?
Yeah. Okay, yes.
This is your normal computation, that it is 31st December 2025. So how do you calculate net profit? Add disallowed expenses less disallowed income minus capital allowances will give you a tax adjusted trading profit, correct?
Yes.
So calculate that normally. But when it is included as a part of your non-savings income as income from self-employment, what is our tax year? 6th April 2025 to
It's
604
April
2020
2026.
0504 2026. Absolutely right. So when you're including that, your income from self-employment should only be from 1st April 0104 2025 to 31/12/2025. So how much ever is your tax adjusted trading profit, that should be multiplied by is equal to TTP into 9/12. Is this clear?
So we are basically prorating again.
Yes. Calculate your taxable total profits based on the accounting period, but when you're including it for income from self-employment, it should be prorated for the tax year. But now let's say they've given it for both the years. They've given for the tax adjusted trading profit for the year ending 31st December 2025 and 31st December 2026. Then what do you do? Your next accounting period is from 0104 0101 2026 to 31/12/2026. You calculate this one separately and this one separately. You get your taxable total profits for both of them.
Yes. And then
Once you get them, yes. Ahad, continue. You
we
tell me.
yes, then we will prorate it for 3 months then.
Absolutely. This one will be TTP into 9/12. TTP is taxable total profits. And this one of 31st December 2026 will be TTP into 3/12. Is this clear? And that whatever you get as a sum total of both of these should be included as a part of your income from self-employment. But what if your accounting period is ending 31st March, that is 0104 2025 to 31/03 2026? Then whatever is your taxable total profit will be a part of your income from self-employment. Clear on this one? Okay,
Could you
everyone
repeat,
seems
could you repeat
confused.
that?
Yes. So here, what did we do? We have calculated it for the tax year from 6th April to 5th April. So we had to do it for 9 months, and this the 2026 taxable total profits for 3 months. Correct? With
Right.
me so
Yeah.
far? But
Yeah.
now, if our accounting period of our tax adjusted trading profits is from 1st April 2025 to 31st March 2026, is it completely in line with our accounting period except for the 6 days and 5 days here and there?
Yeah.
So
Yes, it
that
is.
time you can ignore the days difference, and how much ever is your taxable total profit for this accounting period, the same will be a part of your income from self-employment. Correct? With me on this one? Any doubts?
Yeah.
Is this cleared now?
Yes. So technically this would work in our favor because it's easy then. The
Yes,
tax year and the TTP years,
absolutely right.
they're in line with each
Absolutely
other.
right. Yes. For that to be in line with yours, usually if the questions is 1st April to 31st March, consider yourself to be very lucky because you do not have to do any additional calculations. But if they ask you to calculate, if they ask you to based on this one, then you should do into 9 by 12 and 3 by 12 if it's 31st December or whatever is appropriate accordingly.
Okay.
Clear on this one so far? Any doubts?
All good.
Okay, great. Next is your capital allowances. Capital allowances is a very heavy aspect. Like at least 3 to 4 marks will definitely come in your section C computations itself from capital allowances. So you should know what is AIA, you should know what is FIA, you should know what is a special rate pool, you should know what is a main pool, you should know what is a private use pool, you should know what is a small asset pool. Yes.
Yes.
And after that, you should also know about the structures and building allowance. SB&A is something that is also will be tested. Like SB&A is pretty straightforward. It is directly 3%. But what these are some things that you should always remember on WDA as well as WDA. Main pool is 18%. Special rate pool is 6%. Correct?
Correct.
Yeah. Yeah.
Now, when it comes to private use pool, there are few things that you should remember. All of these you might have already studied. If not, it is very high time that you get thorough with all of these. But a private use pool is something that students tend to make major mistakes in, wherein in private use pool, what happens if there's any asset that is transferred to private use pool, let's say a car with 80 grams per kilometer is being used and it has 30% private usage. 30% private usage exists. Okay. The cost of the car is 75,000. Now, what allowances are available on this car? Can anyone tell me?
Um,
It will be the business proportion.
Yeah, so WDA is available first of all. Yes, because it is technically 80 grams per kilometer. So if there is no private use, it would have been included as a part of your special rate pool.
Yes.
yes, it's more than
So
50 grams.
yes. So for that reason, WDA should be taken at what percentage here?
6%.
6%. And here we reduce the entire amount into 6%. We reduce it. But how much is transferred into the allowances column will only be the business portion of it. That is into 70% is only included as a part of your allowances column. The students tend to make a mistake wherein here only they tend to take into 70%, which is not right because WDA should be taken at the full amount because your balance carried forward will be based on the full amount and not the partial amount. So next year, WD of 6% will be available on this 70,500, and on that, how much is transferred to the allowances is only the 70% portion of that. This is something that many of the students make a mistake in. So it is very important that you keep this in mind. Clear?
Yes.
Yes.
Yeah.
And next is, can you tell me if there are almost 3 to 4 private use assets, then do we include all the private use assets into one private pool?
No,
No.
they have their separate pool.
Yes. So it will always be private use asset pool 1, use asset pool 1, then it will be 2, 3, and 4, so on and so forth. It should all be maintained separately because the private usage varies from asset to asset. So it is important that you keep all of them separately. Any doubts on this one so far?
No, all good.
Okay. So I hope you guys are now thorough with the concepts of income from self-employment, employment income, property income, and all of those. Yes, no, maybe. Are you guys not
I think
clear
so.
so far? Any doubts?
I have
I,
doubts, but when you're going through them, cleared up where I have been making mistakes.
Sorry, Derika, I couldn't get you. Could you repeat, please?
I said I had doubts about some areas, but going through them here have clarified those
Oh,
mistakes.
that is great. That is really great. So this session is only meant for that. I didn't want to revise on the entire concept, but revise on the tricky aspects, because if you're able to remember these tricky aspects, the other areas will become a cakewalk for you. Okay?
Correct.
yeah.
Now, now we'll go to the pension income. Pension income. Pension income is fairly straightforward. Correct? It is, I think mostly students find pension income to be fairly easier because there are two types of pensions. What are they? Personal pension contributions,
And
And
occupation.
occupational.
Occupation.
pension, and occupational pension schemes. Absolutely right. Occupational pension schemes. Now, in occupational pension scheme, what happens? In personal pension scheme, what happens? If you're here, we're talking about, when we talk about pension income, it will not be considered as an income, but it will be considered as contributions. That is your contributions that you make. So
Mm,
whenever there are any occupational pension, there are two aspects relating to it. One is employee contributions, and the other is employer contributions, correct?
yeah.
What happens to employee contributions and what happens to employer contributions?
Uh,
I think I think
they're given at a
the
source.
Sorry,
They're both given at a source.
they're both given. I couldn't get the last word.
At a source.
I didn't get that, Derika. So sorry. Did anyone catch that? Because I think it was not clear for me.
I
she was
think
I,
saying they're
that
deducted as
they're
source.
deducted at a source.
Deducted
deducted
at
at the
source.
end.
Yes, deducted at source. But how do we do that? Employee contributions. Will this be a taxable? Will this be an allowable deduction from employment income, or will that not be considered for employment income computations at all? Now I am an X individual. My name is X, and I work for company Y, and in that I have made contributions to my pension scheme to be £4,000. What happens to it?
It's exempt.
It will be an allowable deduction from your employment income. Okay, allowable deduction from your employment income. That is, let's say your income is 75,000 and you make 4,000 contributions. Your taxable employment income will now only be 71,000. Okay.
Yes. Sorry. It's employer contributions. That's exempt.
Yes, employer contributions are an exempt benefit. That is, if an employer makes contributions into your account minus 3,000, it will not be reduced or it will not be added as a taxable benefit, but it will be zero. And you get it to be 75,000, 71,000 only. Employer contributions are exempt. But what about for Y? Now, Y is making contributions to the employee at £5,000. Is it an allowable deduction for computation of income from self-employment?
Mm.
Employer contributions, whenever an employer is making any contributions, those are allowable deductions for your income tax adjusted trading profits. Is that clear?
Uh, Could you repeat? Sorry.
Yeah, any
So,
employer contributions. Let's say here we're talking about Y, who is making 5,000 contributions towards into excess pension scheme. Okay.
Y is the employer?
Y is the employer. Okay, I'll write Y limited. Okay.
Right. Okay.
So when Y makes 5,000 contributions into to excess pension scheme, then
Right.
when we are calculating Y limited's tax adjusted trading profits, it will be shown as an allowable deduction. Is this clear?
Yeah.
Yes.
Great. Now let's move on to personal pension scheme. What about personal pension scheme? How do you get the benefits from that? Is personal pension contributions deducted from your incomes, deducted from your taxable income?
No.
Then what happens to them?
The benefit is via band extension.
First, it will be grossed up by HMRC, correct? Grossed up by HMRC. That means any contributions that you make should be deemed to be only 80% because further 20% contribution to whatever you make will be made by HMRC. Yes. Let's say you're making only 30,000, you want to make 30,000 contributions to your personal pension scheme. Then what does HMRC do? They'll be like, we will add another 20%, and now your contributions will be at 30,000 into 100 by 80. 37,500 because this 7,500 will be added by HMRC. Is this clear? Do you remember the gifted donations and the personal pension contribution? Whatever you may pay, if it is a net payment, then it will be grossed up by HMRC, and your benefit that you get will be on the gross amount and not net amount. Do you remember studying that?
Yeah.
So
Yeah.
do you get this concept now?
Yeah.
Yeah. So this is really gross amount would be added to the basic rate by
Yes.
the
This
extent.
gro this yes, this gross amount will now be added to basic rate band, or will it be added to higher rate band as well?
No, is it is it not just the basic rate?
No, it will be added to
Or
both the rate bands, rate band
oh,
and higher rate band. Okay. So your basic
right.
rate band, which is 0 to 37,700, will now become is 37,700 plus 37,500. 1,700 plus 37,500. Is that clear?
Yeah.
And your higher
Yeah.
rate band, which is at 125, 140, will also be extended by 37,500.
Correct.
1,500. Is this clear now?
Yeah.
Yep.
Now, these are the two benefits you have identified, absolutely right. But because of personal pension contributions, something else also is affected. What is that? You calculate for your personal allowance computation. What should you do? You should calculate it, your personal allowance. If your income, adjusted net income exceeds 100,000, your personal allowance reduces, correct?
Yes.
How do we
Yeah.
calculate adjusted net income?
Your net income minus gross personal pension contribution minus gift aid donation.
Absolutely right. Absolutely right. Gross personal pension contributions minus gross gift aid donations. If you do this, you get your adjusted net income. So because of personal pension contributions, they are being grossed up by HMRC, your rate bands are exceeding, and your adjusted net income is also reduced as a result of this one. Clear?
Yeah.
Any doubts on this one so far?
No.
No.
All right. These are some of the concepts that are trickier concepts to remember. So if you're able to remember all of these, your computations become easier. And in your exam presentation for income tax, come what may, whatever types of income are there, always present it as NSI, SI, and dividend income separately, and add another column for total income. Your presentation should always be in this manner. So if you can see, we will be solving another section C question as well. So whenever you're solving any question, make sure your presentation in this is in this manner. Because whenever you're deducting your personal allowance, less personal allowance, what is the first preference for personal allowance deduction?
The NSI.
NSI, then it will be SI and then DI. So for that reason, because you should know how much amount should be deducted from each, and the tax rates, because there is savings rate band applicable for savings income and nil rate band applicable for dividend income, it is important that you present it in this manner. All right.
Yeah.
And if you're thorough with your income tax from self-employment, then your partnership is also the same. When it comes to partnership income, always remember, first step, calculate the taxable total profits of the total company. Taxable total profits of the total company. Okay. Then from that taxable total profits, write this as TTP to be X. And there are three partners, A, A, B, and C. If your taxable total profits is 100,000, then from this 100,000, first you allocate salaries based on the salary requirement. Let's say 25,000, 10,000, 10,000. All right. After that, if there's any interest on capital, add that. Interest on capital, add that. Let's say 3,000, 2,000, 2,000. And then how much is remaining after this one? This will be sum total of these incomes. Same thing for interest on capital will be 7,000. So how much is the remaining profits? It will be 100,000 minus 45,000 minus 7,000. Correct? With me so far?
Yes.
Yeah.
Yeah.
Now, this 48,000, let's say the ratio that they're splitting across the partners is equal. So it'll be 48,000 by 3. It'll be 16,000 to all of them. It is just the value that's to be taken. Okay. This will be what is included sum. This is the amount that should be included in income from self-employment. Income from self-employment for each of these individuals. Is this clear?
Yeah.
Any doubts on this part of it so far? And for partnership, if there are any changes in profit sharing ratio, or any partner is leaving or joining, then what should you do? First, calculate for before leaving, or changes in before any changes, and then for after changes. Okay, that means let's say our taxable total profits are 100,000, but there is changes after 3 months. Then first for those 3 months, keep your TTP to be into 3 by 12. Okay, 25,000. So based on this, do your calculations. And after that, for the remaining 75,000, do the calculation again. Is that clear? So it should always be before change and after the change. That's how you should do it.
Okay.
Okay.
So with this, we have completed our quick revision of our income tax. Are you guys having any doubts on any of these concepts?
Not really anymore. It was cleared up for me in this class.
All right, great. Guys, I am not taking up the tax administration part of it because that is something that you will have to just remember the dates. What is the filing date? Like for income from income tax payment, it is 31st January following the end of the tax year. Repayment interest is so and so amount is 8.85%. All of these is something that you should remember at any cost. Those, even if I tell you, it'll just to be me telling those out, but but it is important for you to just go there and write down all of the important dates. When should the first payment on account be made? It should be made on 31st January during the tax year. Second payment on account 31st July after the tax year. All of these are some things that you should be able to remember. So take up some time, good amount of time in the coming 1 week to be thorough with what are the tax due dates, what are the penalties applicable, what are the fines payable, the penalties applicable. So what is the interest payable, or in what is interest receivable, and how long should the records be maintained for? Records be maintained for. These are some of the very important aspects when it comes to income tax administration for income tax and corporation tax as well. So try to take up some time to prepare on these and revise on these. But if you are finding something difficult that you are not able to understand, you have my contact details. You can reach out to me at any point of time. Okay.
Yeah.
Now, with this being said, are you guys ready to solve our next, question practice? This is a pro forma that we should follow, which I've told you guys about. So always keep it non-savings income, savings income, and dividend income separately, and then compute it. All right.
Yeah.
Okay. Now let's start solving our question. Felix is a self-employed trader. He's also. Can you guys see the question clearly? Okay, let me maximize the screen so it'll be easier for you. Felix is a self-employed trader. He's also a landlord. The following information is available for the tax year 25 to 26. So this relates to tax year 25-26. Self-employment. Felix prepares accounts on an accrual basis. His statement of profit or loss for the year ended 5th April 2026 shows a net profit of 94,200. It has been mentioned as net profit of 94,200. So even if the word accrual basis is not given, what do you prefer? What should you be taking? What basis should you
Um,
be taking?
cash basis.
Cash basis?
The
It
fact that it
says
has
Percent what?
net profit means that you would take it from the accruals basis.
accrual basis. Yes.
Ah,
Whenever the
ah,
word says net profits, you should take it accrual basis. Unless mentioned otherwise in the question says, though net profit is given, calculate under cash basis. Then you take up cash basis. But otherwise, in 99% of the scenarios, if net profit is given, it will always be accrual basis. Is that clear?
okay, yeah, yeah.
Yeah. The net profit is after deducting 4,800 for the annual lease of a car with CO2 emissions of 85 grams per kilometer. Here, CO2, this profit is after calculating the 4,800 for annual lease. Then what will happen? It has CO2 emissions of 85 grams per kilometer. Then what will happen to it? The lease cost is 4,800 with CO2 emissions of 85 grams per kilometer. Then what will happen to the leasing cost?
15% of it will be added back.
Absolutely right. 15% of it should be added back. Next, Felix drives the car for both business and private use. He estimates that 20% of the mileage is for private journeys. Now, 20% is for private journeys. Then, is the entire cost allowable for income tax computation? Entire cost of the car, is it allowable for leasing, allowable for computation of our income?
No.
So, private usage is disallowed?
Yes.
Correct. Now tell me, if in corporation tax, if they mention that there is private usage, is there any disallowed expenditure then?
No, it
Corporation.
doesn't matter under corporation tax.
Yes, there will be no private usage deductions when it comes to corporation tax. It will only be for income from self-employment. Clear? Now, during the year, Felix took out goods out of the business for his own use. The goods had cost the business 600 pounds and the market selling price of them is 1500 pounds. So here goods are being withdrawn for private usage and no adjustment has been made in the accounts for this transaction, although the original cost of 600 was included in the purchases. So here when goods are withdrawn for private usage, what is the adjustment for it? Can anyone tell me? Anyone? Do you want me to explain or do you guys have an idea?
Yeah, it's fine.
Okay. So if the goods are withdrawn for private usage, there are two adjustments. If the accounts have been adjusted for it, then what happens? The profit margin should be added back when computing the taxable total profits. Okay. When the question says, it will be provided in the question if it has been adjusted or not. Okay. Clear? So here, what is the profit margin? The goods cost is 600 pounds and they're selling for 1500 pounds. Profit will be 900 pounds.
900 pounds, yeah.
1500 minus 600 will be 900 pounds. So if this was adjusted for, then this 900 should be added back to compute our taxable total profits. Is that clear?
Yeah.
Yeah.
With now, if the accounts have not been adjusted for goods withdrawn for own use. In that situation, the selling price selling price should be added back. Selling price should be added back to computing our TTP. With me on this one so far?
Yeah.
So here, no adjustment has been made in the accounts for this transaction. So how much should be added back? Is it 900 or 1500?
15.
1500. Absolutely right. Now that is given up. So is the 600 relevant to us in any manner right now?
No.
So we can just strike it through. So once you strike through, if you use these features of striking through and all of these, what will happen is you will know that these should not be considered. So even though you are in a hurry, you will ensure that you have striked it through. So you'll not consider it in your computations. Okay. Next, we have our property income. Felix bought a rental property and let it out from 1st September 2025 at a monthly rent of 2100, which he received on the first day of each month. He paid insurance of 520 on 1st September 2025 to cover the 12-month period to 31st August 2026. In addition, during the tax year 25-26, Felix paid the following expenses. Letting agent fees of 1680. Is this an allowable deduction of agent fees?
Yeah.
Yes.
Absolutely right. Interest of 4100 on a loan taken out to purchase the property. What about this one?
This would be exempt.
It'll be exempt.
This would this because this is less than 10,000, it wouldn't be exempt in this case.
The 10,000 rule is for the beneficial loans for income from self-employment. This relates to property income, not
All right.
self-employment at all.
So
So what do you do with
Um,
this interest? Yes, Ahad.
yeah, I think we can do at the basic rate of 20%, we can deduct that from our final income tax liability.
Absolutely. This will be the tax reducer, interest relief or tax reducer that you get at 20% from your income tax liability. This will not be considered for property income, but will be considered for tax reduction purposes. Clear?
yeah.
Next, during the tax year 25-26, Felix received dividend income of £8,000. So this 8,000, is it a part of non-savings income?
No, it's a separate column.
Correct. It will be a separate column. Pension contributions. During the tax year 25-26, Felix made personal pension contributions of 12,800 net. So here they have mentioned that it is net amount. So what is to be done with this one?
We gross it up.
We gross it up. And because of grossing up, what happens?
The bands will be extended and the personal allowance will be reduced.
Will be reduced because of that, or we use it in calculating our personal allowance, correct? Adjusted net income.
Yes, sorry.
Yeah. Felix is considering transferring the ownership of the rental property to his wife, Sylvia, on 6th April 2026. So is that in our tax year? 6th April 2026. Is that in the tax year 25-26?
No.
No,
So this is now irrelevant to the tax year. Sylvia has no other income and Felix income is expected to remain how much is it? Remain the same for the foreseeable future. Okay. Now the question asks us calculate Felix's income tax payable for the tax year 25-26. Let's start off with our income tax computation. Yes, no, maybe.
Yeah.
Yes.
yeah,
We should write Felix's income tax computation for tax year 2025-26. Always remember, whenever you are solving a question, writing the name of the individual in question is important because they should know that whatever you are writing is being relevant to what is being asked for. So writing this is always important. Take up the line that has been already mentioned and just copy paste it here. Okay.
Okay.
yeah,
So now what all are the types of income that we have got? We have non-savings income.
yes. Uh, NSI, SI, and DI.
We have savings income. Where do we have savings income?
Oh, sorry, we don't.
We have dividend income next.
Dividend income, yeah.
And then we have our total income, correct? Always your presentation should be this way, as I've earlier mentioned as well. Now, first, what do we have? Income from self-employment, correct?
Yeah.
Or you can write tax adjusted trading profits, tax adjusted trading profits. And you write it as, because there are adjustments, always remember easy to show it as a working rather than presenting it entirely here. Okay. So tax adjusted trading profits, and then you should always preferably show it as a separate working. You can show it as a working one, income from self-employment, and keep it here this way. Is this clear?
Yeah.
Income from self-employment. What is the first thing? Where do we start it off with?
The net profit.
Net profit, obviously. Net profit is 94,200. From this, what should we do now? Always in your presentation, ensure that you're going in the same order of the notes that are mentioned. Okay.
Yeah.
Now we have the leasing costs. In that leasing cost, disallowed leasing cost is there, correct? Disallowed leasing costs, 15% is there? Yes.
Yes.
It will be equal to 800 into 15%. Is that yes, no, maybe?
Yes.
Okay. Next, we have our private usage of leased car. There's a private usage of the car involved as well. So
Yes,
how do we
20%.
calculate that? It will be 4,800 minus 720, because 720 is anyway disallowed, so we should reduce that.
Can you pull across the screen a little so we can see the full working?
Sorry?
Can you pull the screen more to the right so we can see the full working?
Okay. Is this all right?
Yeah, that's better.
Yeah, that's better.
Okay. All right. So 4,800 minus 720 is something that is already disallowed. So we should reduce that. The 720 that we have calculated as 15% of 4,800 is disallowed, correct?
Yes, yes.
So that should be reduced. And on this, we calculate 20%. Is that clear now? Did you guys understand why we took the 720?
Do we not add the 720?
If we add 720, is it not exceeding the 4,800 that's already there of the leasing cost? The leasing cost is only 4,800. Out of that, 720 is already disallowed. So we have already reduced, we have already removed it from our.
Oh, right. Yes. Yes, sorry.
Got it? So
Yeah.
using this point is very, very important. Next, what is the next thing? We have completed everything relating to leases. Is there anything left?
I have a question for the 20%. We're including just the 20% because it is for private use.
Yes, 20% is, we are disallowing it. Because it is disallowed, it should be added back.
Okay.
Correct? So that
Yeah.
is why we are taking the 20%. Because the 80% of business usage is allowed.
Mm-hmm.
Got
Okay.
it?
Yes, but
Next, what do we have? We have goods taken for private use. Taken for private use. How much should we add back over here?
1,500.
1,500. Absolutely right. Is there anything else that is to be added or deducted?
no.
So no. So this will give you your taxable total profits, which will be equal to sum total. Guys, try to use these as much as possible. It will really be beneficial to you. All right. Now, where will you keep this 97,236? As a part of your non-savings income or dividend income?
Non-savings income as
Non-savings income.
income from self-employment.
Again, sometimes what we tend to make. So I am a person who makes very such silly mistakes. So I'm taking myself as an example and telling it. Sometimes we know that it is 97,236, but sometimes I write it as 97,326. Mistake happened.
Oh, that's
Yeah.
happened to me many times.
Yeah, I know. It is a very
Yeah.
common mistake that happens with me. So for that reason, always refer it is equal to this one. Then you get your value. So that when you will not have these mistakes of transposition at all. All right, because this is formula driven, this is also formula driven. Is there any chance for an error to happen, human error to happen? No.
No.
So always prefer using such formulae is equal to, if you have a value over here, use is equal to and get it here. Your mistakes will be reduced by a maximum amount. All right.
Yep. Got it.
Next, we have our property income with us. Property income, how do we calculate? What happened? I think I've gone to our next question probably.
Yeah, it's part B of the question.
Oh, I'll go back then. I don't know what happened suddenly. Okay, here. Next, we have our property income. Does property income also include any adjustments?
Yes.
So show it as a separate working. Anything that has an adjustments, do not show it here in the formula bar directly. It gets confusing. So show it, present it in a clear manner, working to property income. What will the property income first be? Your rental receipts. What should we use for property income? Do we use accrual basis or cash basis? Anyone?
The accruals basis?
Terika says accrual basis. What about the others?
I think accruals basis as well because because it says in the question that for self-employment they prepared their accounts on accruals basis. Maybe that's also tied in with property income as well.
Okay. Damien, what about you?
Um, I remember you mentioned the point earlier, in relation to cash receipts, that they're assumed to be on a cash basis.
Okay. So here, Damien is right. Guys, whenever, see, tax is again very rule based. So need not take any assumptions into mind. Here, they have given that prepares accounts on an accrual basis is mentioned for self-employment. So this rule is only relevant to self-employment. Okay.
Mhm.
Right. Okay.
Property income, did they mention anything about any basis?
No.
No.
So
No.
default is cash basis. We
Right.
will
Okay.
not take any assumptions at any point of time in taxation. The paper, what we should do, will clearly be mentioned to us. The only time an issue comes up is we should not have any assumptions. We should just know how to apply the rules that they're asking us for. Okay.
Right. Yep.
So here it will be rental receipts. Now he's receiving the rent from what time?
1st September 25.
1st September 25 is receiving a monthly rent on first day of the month. So when is he receiving rent on 1st September, 1st October, 1st November, 1st December, 1st Jan, 1st Feb, 1st March, 1st
The
April,
first
1st May. So now, what all rental receipts do we take for consideration here?
from the 1st of September to the 1st of April.
1st of April. Absolutely right. So how many months will that be?
8.
That's
8
8 months.
months. So it will simply be is equal to 2100 into 8 months. Now I have a quick question. What if he said he received a rent on the last day of each month? Then how much should we take?
It will be 7 then.
It will be
7.
7. We don't consider April. What is the reason for that?
It's only a few days in a
Sorry?
month,
If
because it would only be a few days within a
Third,
month.
we are cash basis is what we consider. So 30th April, does it fall in our tax year?
No.
So for that reason, we will not be considering because income is always considered for tax year basis. So our tax year is 6th April to 5th April. So whatever falls until 5th April is only what we will be considering. Is that clear?
yeah,
Okay. So rental receipts is considered. Now, he paid insurance for 520 on 1st September 2025 to cover the 12-month period to 31st August 2026. So should we prorate it now?
Could you repeat that?
Yes.
yes, as
I am
it is.
asking, insurance was paid on 1st September 2025. It covers a 12-month period to 31st August 2026. Do we prorate it?
Yes.
It says yes. Listen,
Yes.
what is the
Um,
basis that we have discussed right now? Cash basis. That means whatever is received
or
minus
whatever.
whatever is paid. It is not based on receivable minus payable. If you paid 520 for the year, then it will be considered for this year only. All right. That is what cash basis is. You should take expenditure incurred minus revenue received minus expenditure incurred. Now, do we take 520 or not?
Take the full 520.
Absolutely. 520. Next, what about letting fees or letting agent fees?
Yes.
1680, do we take it in full?
Yes, you do.
Absolutely right. 1680 will be taken in full. And then what about interest?
I think you would deduct it from here.
Sorry?
Would you?
I
Would it?
think I think the
I was
interest would
thinking it
be
wouldn't be
zero,
deducted
and then the
from here.
tax relief is given when from the full tax liability.
Yes. So here
Okay.
it should be kept at 0. All
Right.
right. You write this, you get your half mark.
Okay.
Got it?
Yeah.
Is there anything else that is to be considered other than these?
No.
No. So that will give us our total property income to be at is equal to sum. Again, use the sum function. And this is what I was coming at. Insurance, you knew it was 520. Letting agent fees, you knew it was 1680. Then you forgot to keep minus and you forgot to keep minus here. And here you did the sum instead of, if you don't use the minus symbols, guys, do this. It will be 16,800 minus this one, minus this one, minus this one. Okay. Transposition errors are some of the very common mistakes that are found in the tax examination. Okay.
Yeah.
Yes.
Yeah, just one question. Can
Yes,
you
Ahad.
explain? Yeah, can you just explain the insurance? Why? So I understand it's cash basis, but why did we not prorate the 520?
So Ahad, right now, what is cash basis? It is any cash
Cash
incurred, you will have
received,
to
cash paid.
paid. So here, this 520, did you pay it in the current tax year?
Yes,
Then we take it in full. What is
right.
accrual? Accrual means you're apportioning it based on the period, based on the total period that it relates to. But cash basis is if you have incurred any expense or if you have received anything. Let's say you have received received income rent for August 2026 in the current year. Even do you take it or not? Rent received of August 2026 in the current year. Do we take it or we don't take it?
If it's
But
accruals basis, then no. Cash basis, yes.
Simple. Because you have received it in the current year, you will include it in the property income.
Correct, yeah.
Okay, so is the doubt cleared now?
Yes, it is. Thank you.
All right, great. Now non-savings income is property income also we've calculated, which is coming up to 14,600. Yes. After this, what type of income do we have got?
Dividend.
Dividend income, which will be a part of dividend income to be 8,000. So now we can total it up. B is equal to sum total, these three, and then you can pull this out here. This total income will be this one plus 8,000 to be 11,936. Now, less, what do? We have to calculate income tax payable. So what should we reduce?
The personal allowance.
Personal allowance, but it would be
Personal
0.
allowance. So personal allowance, what do we calculate personal allowance? Is it on our net income or is it on our adjusted net income?
Adjusted net income.
So is the net income same as adjusted net income for Felix in the current situation? Felix has, what is adjusted net income? Net income minus gross personal pension contributions minus gross gifted donations. Yes, no, maybe.
Yes.
Aren't there personal pension contributions made during the current year?
Yeah.
Yeah.
So so your adjusted net income will change. Anyone? Yes, no, maybe.
Um,
So
yeah.
personal means we will show it as working three
That's
pro. I
that's
will,
it well
yes, I
because
will,
so
yes,
sorry.
absolutely right. Working three will be calculating about personal pension. Sorry, personal allowance. Computation. What will be your adjusted net income? Will be net income first, which will be equal to
111836.
119 total income. This is income, right?
Sorry, yeah. 119.
Yeah. From this, what should you reduce?
The gross personal pension contribution.
Gross personal pension contributions. Absolutely right. Pension contributions. How much will that be equal to? Is equal to
That is equal to
12,800.
Times that
16,000.
by
Times
100 over 80.
100 over 80.
Correct. And 200 by 80, which will give us 16,000. Now, how much is our adjusted net income? Will be equal to this minus this one. So it will be 103,836. Yes.
Yes.
All right.
So when will your personal allowance reduce? How will your personal allowance reduce?
By half, in excess of 100.
Yes. So
100,000.
personal allowance reduction will be equal to is equal to this value minus 100,000 divided by 2. Yes, no, maybe.
Yeah.
Yes.
So now adjusted personal allowance. How much will that be? How much is your personal allowance normally?
12,570, and then it will be this figure deducted.
So it is 10,652, correct?
All right.
So where do you take that personal allowance now? In your non-savings income or dividend income?
Non-savings income.
Non-savings income, 10,652. And you should also show the same figure over here. Minus 10,652. Or you can simply write is equal to this one. Okay. Now you get your taxable income to be at Is this clear? Are you with me so far? Taxable income is correct.
Yes, please.
Now let's
Yeah.
start calculating our income tax liability because that is what they're asking us, income tax payable.
Yeah.
So income tax liability on non-savings income on NSI. How do we do that? First, how much will it be? How much will our be 0 to 37,700?
The pension would have extended the basic right now.
Absolutely. So it'll be, how much will the basic rate band now be equal to 37,700 plus, do we take 12,800?
That's 12,800. No, sorry. How much is the gross amount? 16,000?
Yes. So the basic rate band will now be at 16,000 plus 16,000 will be extended. So our basic rate band now is now at 53,700. And how much will that be taxed at?
20%.
20%. Absolutely right. Into 20%. Now, what is our higher rate band now increased to?
Um, 103,440.
Part two.
Plus 16,000. It'll be 141, 140. But is our income falling in that much?
No.
No.
Well, yeah.
So
Wait.
what will we do? It will be is equal to 101 is equal to this one minus this one. Correct?
Yes.
At what percentage do we take it at?
40%.
40%.
Into 40%. Absolutely right. So you get 18,984. 18,994. Correct?
Yeah.
Now, what do we consider next?
Dividend income.
Yeah. So dividend income, do we directly take 88,000?
You have
No,
to
we have to
break
put it
line
on it
of
down.
500.
Absolutely.
That's
500.
500.
Next, now we have income tax liability for ability for dividend income, which will be nil rate band 500 at 0%. So it will be 0 is equal to 500 into 0. What about the remaining? Remaining at what percentage do we take?
This would be 37.
Is it
Use your
30?
tax tables. Use your tax tables. Do
Right,
not have to
33.
remember it.
33.75. Yeah.
8.75.
It will be
33.75.
33.75%, remaining at 33.75%. So you can write is equal to 8,000 minus 500 into 33.75%, giving you 2531, making your total income tax pay liability ability to be at is equal to 2531 plus 0 plus this one plus this one. Now there from this, what do we reduce?
It's 20% for the interest on the
Yes,
property.
less interest relief, loan interest relief, loan interest relief. Will be at is equal to minus 4,100 into what percentage do we take?
20%.
20%. Absolutely right. Be minus 820, giving you your income tax payable to be at is equal to this minus this one to be at 31,445. Is this one clear for everyone? Are you guys having any doubts?
No, please.
And you do this, you get your 12 marks in entirety. This is how your presentation should be. Anything that has adjustments, always show it as a separate working so that you can see over here it looks the answers look very clear. But where are these values derived from? Each of them are derived from workings. You should explain that in the comma, open it in the brackets and put it working one, property income is working two, And then personal allowance will be based on working 3. You write that. Your presentation is clear. It is very, is it not understandable for the examiner?
Yeah.
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 So once the examiner sees the presentation, they'll be able to identify what is what and they'll be able to understand it better. Clear?
Yes,
Yeah.
please.
All right. With this, we have completed our 12 marks part of it. Now let's move to the next remaining part. Explain how Felix and Sylvia's income tax liabilities for 2026 to 27 would change if rental property was transferred to Sylvia on 6th April 2026. Here, what is happening? They have mentioned this to us somewhere, which is Felix is considering transferring the ownership of rental property to his wife on 6th April 2026. So, here the question also about tax year 26-27. Correct? Sylvia has no other income, and Felix's income is expected to remain the same for the foreseeable future. Explain how Felix and Sylvia's income tax liabilities for the tax year 26-27 would change if the rental property was transferred to Sylvia on 6th April 2026. They're asking about what would happen to the income tax liabilities of Felix and Sylvia. Calculations are not required for this question. So whenever they say calculations are not required, you do not have to calculate it, but you should write it in a very generic sense. Okay. Can you guys tell me what will happen to Sylvia, Felix and Sylvia if this property income of 14,600 is being transferred to Sylvia? You can take 2 minutes, take a look at it, and then tell me.
Um,
So what is happening because of that? This property income will not exist anymore with Felix. It will be part of
okay.
Sylvia's income, correct?
Yeah,
Sylvia will
so
get 14,600. Now, what will
Felix,
happen because of that to the income tax liabilities? Yes, Derika, go ahead.
Felix's income tax liabilities will be reduced. You have to give the amounts, right?
Sorry?
Felix's income tax liability will be reduced, so you will have to give the amounts in the answer.
You don't have to give the amounts at all. They're asking us about what will be the effects of it. So when they're asking us about effects, you have to look at the overall question. Okay, let me just help you out with this one. So probably whenever you're solving the next question, it will help you out better. Now,
Mhm.
if this 14,600 is reduced, okay, you should not
Mhm.
write the calculations, but you can do the calculations for your understanding, correct?
Yeah,
What will be the total income of Felix now? 97,236 plus 8,000 only?
yeah.
Because they told they are not expected to change.
Mhm.
It is 105,236. But he also makes pension contributions. Minus 16,000 is a pension contribution that he makes.
Oh, he will get the full personal allowance.
Yes, absolutely right. Is he not getting the full personal allowance now? Because earlier it was adjusted, reduced. But now he's having the full personal allowance, as Ahad has rightly mentioned.
Can you repeat that?
Okay. So here, what is the question saying? They said that you should assume that Felix's income is expected to remain same for the foreseeable future. So whatever income he's getting, it is expected to remain the same. That means his
Mhm.
tax adjusted trading profits will be the same, dividends will be the same, and
Mhm.
because he's also making personal pension contributions, those will also remain the same. Correct?
Yes.
Yeah.
If we remove the property income, what is the income of Felix right now? It is 97,236 plus 8,000,
Mhm.
which is 105,236. Yes, no, maybe.
Yes.
Now, okay. If it is 105,236, but is he getting the full personal allowance on this scenario when the property income existed?
No, he isn't. So,
Because his adjusted net income is over 100,000. Now, what is his adjusted net income? How much will that be now? 5236 minus 16,000. Yes.
Yes.
16,000 relates to the gross personal pension contributions. Is it not 89,236?
Yes, please. So therefore, he would then get the
Full personal allowance? Absolutely
margin.
correct. So that is one point that will help Felix. Felix, by transferring the property to Sylvia, Felix will now have his adjusted net income under 100,000, under 100,000. So he will be getting full personal allowance, and thus reducing his tax liability. Written this point. Did they ask for calculation? No, they didn't. Clear on this one? First point is clear.
Yeah.
Now, what will happen to Sylvia? Sylvia had no income earlier. Okay. Sylvia has no income.
Um,
Correct. Yeah. Now she has income, so she will be chargeable to tax.
But correct. Absolutely right. But here you can see what is the tax adjusted trading profit of Felix?
97.
97. So considering only this one, he's a higher rate taxpayer.
Yes.
So the property income that which is after that is obviously being taxed at higher rate at 40% only, 40 or 45%, 40%. Yes,
Mm-hmm.
no. But now if this 14,600 is transferred to Sylvia, what is happening? How much is taxable income of Sylvia now?
20%, and Felix's
Minus
Felix.
12,570 first one. We are getting 12,570 zero, right? Personal allowance. There's no
Yeah.
other income.
Yeah.
So technically 12,570 of this 14,600 is now being taxed at 0%.
Correct.
Is it 0%? And the remaining amount is being taxed at 20%, which was earlier to 20, which was earlier at 40%. Yes. Did you get my point?
I think I'm a bit lost.
Okay. So here, if the Sylvia gets 14,600, what will be her taxable income? 14, this is the only income she has got. So 14,600 minus 12,570, because this is your personal allowance.
Yeah.
What will happen to her taxable income will be much lesser now.
Yeah. It'll
Yeah.
be 2030.
Yeah, 2000. Yeah, 2000. We don't have to do the calculation, so let's not do it. But
Okay.
earlier, 14,600 is being taxed at 40% when it was with Felix.
Mm-hmm.
Now, when it is transferred to Sylvia, 12,570 is at 0% because it's being reduced by personal allowance.
Yeah.
And the remaining amount, which was earlier taxed at 40%, the entire property income was taxed at 40%. Now only remaining amount is being taxed at 20%. Correct?
Correct.
Mm-hmm.
So that is also an implication that will happen for us.
Right. Okay.
Do you get that point now?
Yeah.
Yeah.
So by Sylvia receiving the property, Sylvia's personal allowance, which was wasted earlier, is now utilized to reduce the taxable income from property. Yes, Sylvia's personal allowance before she had no income. So it was completely wasted, entirely wasted because it was not being utilized anyway.
Yeah.
So now Sylvia receiving the property, Sylvia's personal allowance, which was wasted, is now being utilized to reduce the taxable income from property income, correct?
Correct.
Yeah.
Which was earlier taxed at 40%, but now taxed at 0%. The remaining property income will be taxed at 20%, which was earlier at 40% when it was with Felix, correct?
Mm-hmm.
You write this point, you get another 1 mark. Hmm? Now, what is happening to income tax liabilities? What will happen on property income? There is an interest on a loan taken out to purchase the property. Yes.
Yeah.
So
Yes.
what will happen to Sylvia? Sylvia will also get a reduction in the income tax liability
By 20%.
by 20% because of the tax relief on interest relating to property income. You write these 3 pointers, you will get your 3 marks. So for every mark you write one valid point, you get your 1 mark for each of them. Is that clear? So here the
Yeah.
analytical thinking is required. You should think in the perspective of, okay, if one property is being transferred, what are the implications? So you can look at the income calculations. You only have done your calculations. So you can take a look at it. Remove this. If you remove it, what will happen? Your total income reduces. Because of your total income reducing, your adjusted net income reduces. So your personal allowance reduces. First point. Yes, no, maybe.
Yes.
Correct. Next point will be about, okay, now we have understood for Felix, but what will be the situation for Sylvia? Sylvia will be able to utilize her personal allowance. Earlier, it was completely unutilized as she had no income. So 12,570, if she had any income of 12,570, it would have been taxed at 0%, correct? So it was going wasted earlier, but now with this income, that 12,570 is not going for waste. You are
Yeah.
getting two full personal allowances, one of Felix and one of Sylvia as well.
Yes.
That
Yeah.
is an
Yeah.
advantage. So you can write that point as well that we have written. Now, after that, because the 12,000, because there is a loan on it, there will also be a tax reduction for Sylvia. That will also be a tax implication because of the transfer of property.
Yeah.
So if you write all of these points, you will get your entire 15 marks. Is this clear, everyone?
Yes, please.
Yeah.
That is how the most common mistakes that students tend to make when it comes to this is not considering. One is about the this one. Most of the students tend to forget about this point about goods withdrawn for purchases. They tend not to take it into consideration because it's withdrawn for personal use, so they consider it to be disallowed. But what happens? It should be added back if it's not accounted for based on the selling price. If it's accounted for, then the profit margin of it. Okay. And the other
Yeah.
mistake that commonly students tend to make is regarding the the car leases computation. In car leases, what is happening? First, the 720 is disallowed. So that is a 15% of it is disallowed because it's exceeding 50 grams. Now, on the private usage part, you should remove the 15% disallowed part, and on that you should calculate the private usage disallowed part of it. That is also something that the students tend to make mistakes in. Okay, so please be very careful with small nuances. Those will cost you your bigger marks. So please be careful and you'll get your good marks. And the other is in property income, which is about interest not taken. The students tend to take it as a reduction, which is not the case. And the other one is this one. Everyone knows it is cash basis because they've studied it. But because of the stress of the examination, it is not because they don't know the concept, it is only because of the stress of the examination, they tend to consider it into accrual basis. But if you're thorough with them, like if you tend to make these mistakes in your preparation, you will be able to remember those better, and you will be able to ensure that you clear your examination. Because the more the mistakes that you make during your preparation phase, the better that you will be able to learn, and the better that you'll be able to clear your examination. Okay.
Okay.
So keep all
Okay.
of these in mind, and then you will be at a very good spot with your preparation. And with that,
Okay.
we will conclude our session. Again, if you have any doubts at any point of time, do not worry or do not hesitate to reach out to me, and I'll be happy to help all of you. All right.
Okay.
Yeah.
All right,
Thank you
everyone.
very much.
Day
Bye.
two of
Thank you.
revision will be
Bye.
over the weekend.
Sorry.
Day two of this revision will be over the weekend.
Day two will be tomorrow. It will be tomorrow from 2 to 4 p.m. IST.
Okay.
All right.
All right. Thank you.
All
All
right.
right.
Bye, guys. Have a great day.
Bye, everyone.
Thanks. Bye. You too.